Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I'm cruising up and down for trades each and every night. With my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market chopped to small gains in the last week as the buying panic moved back into many growth stocks. Actually, breadth has improved a lot in the past 2 weeks, and rising prices fueled rising prices, with no apparent reason for anybody to sell. Renewed buying in the mega caps, led by Apple, continued to bring all-time highs, with many new techs following and the other techs leading to the upside. There's lots of interest now, again, in that category of stocks. And I'm going to show you several of those charts in the next few minutes that I think you're going to find very interesting. Economic indicators were really disappointing as consumer confidence fell. ADP was very weak, it's the private payrolls, and Friday payroll numbers were a huge miss. They were expecting 750,000 new jobs created and only got 235,000. At the same time, the U3 unemployment rate fell to 5.2%, and wage inflation continues to move up sharply. That was a very troubling, disappointing report, and you could blame that on Delta variant, that's for sure. The first reaction was, yay! No Fed taper, more ease. And the gold market and silver market took off on the upside, with silver market moving up pretty sharply today, about 3.5%. That's an 84-cent jump here in the silver market today. So just huge movement into that on this news. The interest rates, though, began to move up. So you're getting some mixed results here on that news, and that's really on wage growth, as you see the reality here. You know, when you look at the effect of the Delta variant right now, it's not even anything like what happened to the damage done in 2020, and of course, Delta variant will go away at some time, and hopefully that's pretty soon. Put it all together, inflation up significantly in the wage category, growth slow and slowing, and the Fed essentially setting up stagflation, like we saw in the 70s maybe, which of course brought the Volcker cure, which was devastating. Well, of course, we're not there yet. It's not anything like that, but we are headed in that direction, and stagflation is very bad for the stock market and for the economy. But if that's what the economic conditions are now, and the U.S. stock market at 205% of GDP, what is the upside potential versus the downside risk? Well, I'm going to let you fill in the blank, as the stock market is incredibly overpriced right now. But, you know, I don't need to really prove to you that the stock market levels are insane. We've brought much about that in the past months. But what about supply-demand situation? You think the Fed has reversed that? I want you to take a look at a chart in here that I think is important. I don't think the Fed has reversed supply-demand situation, and this is a look at equity supply. The supply of equities is soaring. It's actually historic. I want you to look back over at some of these past levels. You could see here where the 2000 bubble, the dot-com bust, came right in there. and you could see the level over here of new supply of stock. It was the largest at that time. Here you could see just before the financial crisis, the amount of stock that came out was enormous, and then afterwards actually you got a big boost. But look at what's going on right now. This is just a massive amount of equity issuance that's going on. This chart, thanks to Yardeni, great site, and that came from the Financial Reserve Board of the U.S. So this is just a picture of just a ton of supply out there coming. I would say that if you do believe that the Fed has erased the law of supply and demand, well then the stock market, of course, is going up forever. But that, of course, is not the case. And you can just, feast your eyes on this chart. It's just absolutely amazing. When the demand side does weaken, you can guess it's going to be a big trouble, because there's just so much new stock that has come out there. And this is very significant. When will you know that it really matters? Well, I'll show you that in the short-term view when we look at the S&P 500 and give you some idea about how the short-term indicators could actually tell you when this just amazing buying panic that's going on in the market might change. So I'll show you that coming on a little bit later on in the show. For the week, actually, the stock market is looking at a just narrowly mixed week. We've had small gains in the S&P 500 and the Russell. NASDAQ up about 1% or so, and the Dow a little dip for the week. So not a lot going on in the indexes for the week. Bonds 30 years are about flat, 10 years up about a basis point. So not a lot going on in the bond market either this week. Gold market picking up about $13, $14. It's coming to an important level in the gold market right now. It's trading around 1832 here at midday when we're doing this show. If it gets over 1836, you could get a short-term spike up into the 1880s. It's really, I knew silver was about to overperform the gold market. And if you watch Future Speak, we talked about that. Well, this is just stupendous action. So the silver market up this 84 cents right now puts it up about a dollar for the week. So just a huge upside move. And it's getting up to levels right now where it looks like the next target for there is at about 25.35 in the silver market. So that's our short-term target right now, trading at 24.77. So some good potential gains ahead. The dollar moves down 0.7% this week, and the pattern has gotten much weaker, which of course would favor the precious metals market for the short term. There's a level in the dollar that we're looking at that is at around 91.78. That would be a breakdown. And were that to happen, then we would definitely lower our targets. And we really need to do that right now, because our targets were getting up to over 94 and then potentially up to 96. But now that doesn't really look like it could happen based on what's the way these charts are setting up right now. So it just might have some more work to do before the dollar can get stronger. And we think ultimately it will do so. Oil gains about $1 on the week, and it's now coming up to the resistance level and backed off from there. Big resistance is at about 70.65, so you might actually see it try to test up in that level again. That's what we have for the opening in here. There's that unbelievable chart again on equity issuance, and I do think that is very significant. I do want you to go to the askSlim website and explore that. Are you new? Then become a free member and get an idea of what we're doing. You can subscribe to the YouTube channel. Make sure you give us a thumbs up for this video. Click that notification bell so that you'll know when we put out new videos. And make sure you do like this video and all the videos that we put up there. That helps us. If you're a member of Twitter, follow us at askSlim. And for any questions about our memberships and specials that we have running on all of this education and analysis that we present all of the time, please do write to Matt at askSlim.com. Coming up, a little preview from Arvi on international markets. I'm going to look at the question, Did the correction already come and go? And we're going to look at the short-term view of the stock market. So every other week we bring the international markets where our members see 11 different indexes and our cycle analysis on that. Arvi does a fantastic job on it. And then on the alternative weeks, we do a stock sectors video, and we always share a couple of those charts with you. This week, we're going to share the Nikkei and the Nifty 50. There are a lot of people from India that watch our shows and are always interested in the Nifty, so they ask us about that. So I want you to see this great work that our really fantastic expert in cycle analysis, Arvi Ramachandran, does. And I think you will love this. So take a peek at this preview of the Nikkei and the Nifty.
So this is the Nikkei 225. And for the Nikkei 225, we have one single cycle that's really in play here, but it is really very clear going back many, many years. You can see the rising phase and corrective phase, the rising phase and corrective phase, rising phase and corrective phase, really super clear. Rising phase, swamped cycle, barely any pullback here, and then a blast off back on the upside in that new rising phase. And we've been in a corrective phase here for many weeks in the Nikkei, and we have been looking for a bottom to form here really for a while. We really weren't seeing any clear rally, so that was a bit of a sign of weakness to us. Now we do see that bottom has very clearly formed, and we also have this upturn in the weekly momentum here as well, which does confirm that we are now in this new intermediate term rising phase. On the upside, we are looking for the Nikkei to get up to this intermediate 61.8 to the 78.6, which is from 29,278 up to around 29,900 or so. That's really the upside target for this rising phase in the Nikkei. So a more positive setup here as we look at it. If we look at the daily chart, you can see the daily cycles here, and we have modified these for the key intermediate term bottom that has formed here. And what's going on at this point is you can see that the slim ribbon has now turned positive. So that indicates that we have positive daily momentum here, and we are in this rising phase on the short term. So what we would look for is any little pullback to likely get bought, and then look for a push back to the upside. One thing that is key to note is we have really drawn this out to be a very positive cycle here, with a rising phase really taking up most of this cycle. And that really makes a lot of sense when you look at where we are on our weekly cycle, which is very early in a new rising phase. The way that manifests on the daily is in the form of a very positive daily cycle structure. So that's why we have drawn it as such. I just wanted to walk through that for those people who are learning cycle analysis out there. So this is the Nifty 50, and I want to zoom out on this chart because this is an extremely clear chart going back many years. We have one single key dominant cycle really in play, and this has been super clear. You can see the rising phase and corrective phase in each of these cycles, extremely clear, with key lows that have formed very close to the idealized timing really in each of these cycles, which is just indicating that you have very consistent cycle rhythms here in the Nifty 50. So I just wanted to zoom out on that chart just to show you the clarity. What's going on at this point is that we are getting late in this dominant cycle right here and still in a rising phase. We have been looking for the Nifty 50 to hit 17,000 for many weeks. We have finally gotten up to that level. Now we have to see what happens versus this level. Do we get a test of this level and then reject? Do we get a test of this level and then a push through that level to the next level? So we'll have to see which of those two scenarios really plays out. On the upside, the next key level is at the intermediate 78.6, around 17,800. Overall, we are looking for a high to form in the next few weeks, and then for this to roll back down on the downside into the next key dominant weekly timing, which is due 10/18 to 11/29. If we go ahead and look at the daily chart, you can see the daily cycles here in the Nifty. We had this sideways rectangle building here, which really just built a lot of energy for the breakout that you see right here. and we are forming one more positive cycle with a higher cycle high and higher cycle low, very likely versus the prior low. This really would set up a new swing high in that next cycle. So that's what we have drawn here. What we'll be watching for is whether we get a new high followed by a failure, or a new high followed by an acceleration higher, as I talked about on the weekly time frame. So watch that very closely. We have a rising 23.6 at 16,800 or so, and then a rising 38.2 at 16,560 or so. That's really the zone that we are looking for the Nifty to test on the downside prior to moving back up in this next short-term rising phase. The next short-term low is due 9.3 to 9.16. So overall, a very positive pattern as we are looking at it still in the Nifty 50.
Great work on that, RV. RV gives those kind of fantastic lessons on cycle analysis every single day. He produces a video for our level 3 and 4 members that are in our trade ideas. And it's just fantastic work. So he's really an expert at this, and you can see that. And what's really interesting when you look at that is the strength in both of those stock market indexes, and that's going to be in alignment with some other things I'm going to show a little bit later in the show. So just absolutely great work. If you want to see that whole video, please do become a level 2, 3, or 4 member. All right, coming up, my stock market analysis. But first, don't go away. Don't scroll forward, because you're going to be amazed at what you see right now. We have a level 2 trial starting today for new subscribers with a 35% discount. What this includes is our stock index report live stream. I'm going to show you that in a couple seconds. It includes the stock index report daily, which is just packed with analysis on the indexes. That's called a daily snapshot. Our weekly stock index report, our weekly ETF review, the Slimulator momentum tracker, where you could look at the longer term analysis on the momentum of over 1,000 different stocks with 22 different canned groups. You're going to get our whole video library. That's 600 plus videos in 9 categories. And you'll see our new trader workbench for your trade planning. All of that available for just 3 months special of $114.75. That's versus our $59 a month price, so you can save 35% and get a real good idea of what that is. Go to the askSlim main page to the top and click on that link there, and you'll be able to subscribe. Or if you have a problem with that, go to the anyone info right man at askSlim.com, and he can share you the link. Let me give you some idea of what this looks like. This is, I'm going to show you 3 days worth of the live stream right in here. This is the end of the day picture that we put out for our members all of the time. What you see in here is the reversal scout, which helps you stay on the right side of the trade, as you can see in the S&P 500, NASDAQ, and the Russell. So these are 15-minute charts. It gives you the support areas right in here, and the bigger supports you can see in the darker green. These are the fib extensions when they're in blue, and the yellow zones are really remarkable. Those are acceleration zones to help you stay and maximize those winning trades. Now, once it gets into a yellow zone, it's just powers through it. The odds are very high, about 70-80% of moving all the way through it. In this case, it moved through 3 of them, and then came up here into the target zone and rolled over. You can see right over here, it was similar action, but a little bit stronger action here in the NASDAQ than the S&P 500. And a powerhouse here as the Russell turned so strong, as you can see. It's just unbelievable information that you get. Let's take a look at the next day, and you can get an idea in here as what happened. So here you can see that, again, it was a strong day, and when it started to roll over, and the reversal scout was telling you that the rally was really over with. This one didn't quite make resistance. This one got up here into the extension zone, and this one up here got about 70-something% through that zone, which is the acceleration zone, and just you would have known that the stronger one in here was the Russell through this period. So just a great look at that for 9-1, and here is 9-2. So I'm giving you 3 days worth, and you can see in here where early in the day the NASDAQ was much weaker and went down through those acceleration zones, tagged support and bounced just perfectly right there. Here, the S&P 500, it actually held up better early in the day, and you could see the strength right in here versus the weakness in there. And again, look at the Russell. That really told you the strength as it gets up near that resistance level right there and then rolls over with the rest of the market. But it was certainly much stronger in here. And if you were long the Russell and short the S&P, short the NASDAQ, as you see, it was very clear to have that pair trade on. So pair trade, know the important levels, and know the right direction that you can see as that reversal scout gives you. These are live, and you don't need any special platform at all. This just you go into our live chart streams area where we have a lot of things for level 3 also, but this is for level 2 and included in this level 2 special membership. So if you're a short-term trader, day trader, you trade the indexes, this is a must-have. So please do consider signing up. You're going to get our whole video library. Also, we put in 3 new ones each week. Future Speak is our most popular video. I do a deep dive into now 26 different futures contracts. Tools for Techs, where there's 80-something videos there on how to use all different kinds of charting tools. Trader Psychology, there's 20-something different videos in there. On the personal side, our IRA MO, haven't done much of that lately, but we'll pick it up again. Stock sectors, analysis of different stocks and ETFs, they're ready to pop or drop. Big picture analysis, which we do, looking at the bigger pictures of the market. Style, strategy, and plan, many subjects on engaging in the markets. Market week and the short-term view, we put that up there every single week, so you can go back and look at all of our videos and learn the analysis. And askSlim Live replays. You'll be invited to most of the events, and you'll get replays on all of the events. And the last one was just fantastic on Trader Psychology. You must see it. It was just unbelievable. It's all included here in this level 2 special we're running. 35% discount, all of the stuff you're looking at right here. $114.75 for 3 months. It's incredible. Big savings, 35%. Go to the top of the askSlim page, main page, and you can sign up right there, or any information you need, write Matt at askSlim.com. All right, stock market correction. We've been talking about that for months. Question is, did it come and go already? Is that possible? We've talked all along here about the mega caps and how they were super strong and how their weighting in the indexes has essentially hidden what has been corrections in other aspects of the market. We were looking for the mega caps to correct into September. However, most of them have made bottoms already. And in their patterns, they're already moving up. So we're going to look at 7 charts. When I ask the question, did the correction come and go already? We'll look at 7 charts that say that did happen. And yes, I am never going to stick with analysis that doesn't make sense just because I want it to prove me right. What I want to do is always show the most important analysis, the highest odds at all times. And that's what I'm going to do right now as I look at 7 different charts, weekly charts, and talk about what I think happened in the market over these last month or two and how this is important right now. So this is the Russell, and we have been showing the Russell. This is a weekly chart, and we've been showing the cycle analysis in here. And you could see the dominant cycle right there. It made the low pretty much on time here, the same thing right over here. And we were projecting this gray area, this nested area, as when that low was likely to come. This correction was months and months long, like 5 months long or 6 months long, in just trading in this narrow range. Then here, this is an important date, 7/19. This is the highest odds of a bottom being made, and you could see the shape of the pattern as it begins to rise in here, that we are in the next rising phase over here. So the question is, how can the stock market be in a correction when you've had this sector of the market which is the most speculative, of course, now beginning to move up, as you can see in here. We don't really know for sure which is the low. This one would be right spot on time there, but it really looks like it's this first one over here. And there's an important low in the S&P 500 on 719 that was only 3.6% down, and that would be the wildest smallest low that has happened in years and years, but anything can happen in this market, and it has been incredibly powerful. And our short-term charts have told the story, and I will show you that in just a few minutes. So here's the Russell having made a bottom and is rising right in here. Pretty tough for the market to be turning into a correction when the Russell's already rising. Let's take a look at the Dow Jones Transportation average. While we were looking for a correction into September, as you could see here, and I just want you to see the weekly charts in here, the phenomenal, perfect, almost perfect look at the cyclical analysis. This is, of course, the cycle bracket, and the cycle brackets in the bottom are a guide. They help us understand the rhythm in the market. And you can see where the actual lows came on these cycle lines that we have in there. And look at how they almost exactly hit the ideal locations. This was super strong right in here. The yellow areas are where we expect declines. Those are phases of decline. The green area is where we expect the rise to begin, right in there. And you can see how each of those green areas began the next cycle as it began to move up. In addition to that, the momentum conditions, as shown by the reversal scout right over here, once it turns up on the other side, on the right side of the bottom, it confirms the bottom, as it did here, and is doing right here. So here we are in the Dow Jones Transportation average. We expected a correction into July, August, September. This one came at 13%. And now is done and beginning to move up. Now this is not a big upside move, though we're getting the momentum beginning to come up in here. We would guess that it would accelerate up here because the probabilities are very high of it equaling 1670 before any peak is made. If it breaks down below this cycle low line, you can see right there, it suggests a major top. So while we were looking for a correction here and it came, we're actually on guard here because this is not all that strong. But still, it is in a rising phase, as you saw right here, and this bit of sloppiness right over here could be followed by the buying coming in if investors start to look at the cyclical stocks, the stocks that are kind of left behind in here, and that's what these Dow Jones Transportation stocks are. Is the next rally those cyclicals? Well, that's the question, and we have right there that we're posing. So this is a very clear look at that cycle analysis. And of course, go to askSlim.com and go to our cycle analysis workshop tab, and you'll be able to learn more about that. So this is just a great picture there, and it's rising. So it's pretty hard to be calling a correction when you have that bottom in place after a 13% drop. Let's look at the European major stocks. This is the FEZ. This is the Euro Stocks 50. Look at the clear picture in here. This correction that we were looking for during this time period, 9.6%, hits the supports and moves up, just like it did here. Hits the supports and moves up, and look at the cyclicality in here. So here we are now about 6 weeks into this rally here, and this is that important July 19th date that I talked about on the Russell. Same thing. There's an alignment there. So the correction we were looking for that could extend it out over here, well, the probabilities of that are certainly greatly reduced when you look at this. Apple was one of the stocks that we said was likely to move the market down into September because we expected this correction down to the 137 to 140 area. It missed it. It came down over here to about 142 something and then began to move up again. So when you look at the cyclical patterns in here, and you could see the minor and dominant cycles, the minor ones are the small ones, and here we are with both of them pushing up right over here. This is the XLK pushing up right there, and this is what we call an extremely swamped condition. The correction in Apple was 4 sideways weeks, and then it broke out on the upside. And guess what? It probably still has more to go. There's a potential target up here near 169. There's one over here which could end at about 158, but it's still a few points up, and it's only 2 weeks moving up. If Apple were to get underneath these lows in here in the 143s, 144s, it would be over with. It would not be a good signal. But right now, it's a powerhouse when you look at that, and it has been driving the market to the upside. Amazon was another stock that we looked at that potentially could come down into September, and it made a bottom. You can see that right in here. And again, I want you to see the magnificence of these cyclical patterns. This correction right over here was sideways. That almost looks like the Russell one that we just had. This is an upward what we call configuration with a translation that's positive because it peaked on the right side of the cycle. It made the bottom right over here pretty much on target, though we thought it was going to come a couple weeks longer. And here it begins to turn up. So we're looking for 3,600, 3,650 right over here to around 3,760 to get up there. And if it gets above there, that would be a breakout that would be positive. So pretty likely that it has more to go on the upside. A couple more to look at just so you get an idea in here. NVIDIA, NVDA. Unbelievable, the movement in here, and again, great cyclicality. This was a very brief decline in here. We thought it would come down further out over here. It did not, and then took off on the upside. Again, this is that July 19th date, and that aligns with the S&P 500 July 19th date of only a 3.6% decline. That probably made that cycle low, and we missed it looking at that because we expected some sense of normalcy, but this is not normalcy. We're always quoting the highest probabilities, and in this case, it's showing that that is not what occurred. Take a look at one more, Tesla right in here, and despite bad news of delays on the Roadster and on their Cybertruck, the stock is still going up. And again, the cyclical patterns are positive. The bottom made right here and the rise. The minor bottom right here and the rise. The nested bottom here and the rise. This is likely to get up in here into that resistance area, 780 to about 822 over coming weeks. So again, this is another stock in these market leaders that is exceptionally strong when you look at Tesla. The short-term patterns have told the story, and I'm going to put up the short-term patterns in just a moment. The analysis showed that period of risk, as we said, July to September. All indications are that that came and went. It was hidden, that broad market weakness, which was very significant. You saw that in the Dow Jones Transportation average. You saw that in the European stocks. All of that weakness was hidden by the major strength in the indexes. And now with all of these stocks in rising phases, it doesn't make sense that there's going to be any big decline. We still think there's going to be corrective periods and downside risk. And certainly with the massive overbought condition we're seeing in the market and the unbelievable huge valuations, we're expecting volatility to come. We have to watch the short-term patterns for those indications because they will really tell us, just as they had told us based on the, again, configuration that we have seen and the powerful momentum conditions that the market was in good shape. Despite the fact that we expected a correction, those short-term indicators were telling us different. And we're going to get into that right now. Here's the stock market short-term view with our daily cycle analysis. For those of you that are just watching this clip, and you just happen to be watching it on YouTube, we just did a real important piece that you should watch, looking at 7 different charts that have indicated that the corrective period in the stock market that we looked for might have come and gone. And we're definitely not correct as far as that goes. We just showed what we thought happened, and I want you to go back and watch that video, the whole market week video, to get a good picture on that. What I want to show you right now, and I'm going to move off of Tesla and into SPX, and go to the daily chart. So for those of you that are brand new and not familiar with our style of analysis, what I want to show you in here is the cycle analysis. Cycle analysis gives you the rhythms or the heartbeat in the market. It is rare that you see something as textbook as you see here in the S&P 500, where you have these cycles, the dominant one right in here, which is about 20 days. It's actually an average because this is the ideal, but you can see in here that this was 19, 21, 21, 19, 23. It varies. The principle of variance talks about it varying, and that when you get into the final period in here where kind of the really short-term traders and the next swing trader types start to liquidate, then you get into these yellow zones and you get these corrective periods that you see in each of these. We had looked for this period right in here or this period right in here to align with intermediate corrections. However, they rallied too far and the configurations were too strong for that to happen. On top of that, the slim ribbon, which is the best momentum indicator you will ever see, has stayed green or positive through this entire time period. That's reflected right in here in the slim ribbon PO, which is the signal indicator for the slim ribbon. And you can see as each of these cycles bottomed right in here, it turned positive and positive and positive. And it continued to give you the sense that momentum was continuing on the upside. On top of that, as you could see right in here, it has followed that channel up just unbelievably as each of these corrective periods hit support, and then the magnitude of the advance is just fantastic off of each of these lows. What's important about that is that in these complex structures that we show in here is that they move right up into the upper channels, as you see right over here. And when it does that, the threat of breaking below the key low, which would give you the breakdown and give you a sense for a market top, it was never got close to it, because in the first few days it blasts off on the upside. That happened in this cycle right over here that we are seeing right now as it moves up towards this area. Last week we talked about, when we showed the SPY, that we thought this week it would start to move towards the 452 to 457 area, and it got, of course, right into that zone. So it's continued to follow this upward momentum. Again, we're looking at this yellow zone out over here, and that when it gets into there, it's likely to get a drop. Again, here's your supports right now based on where the market is right now. We'll just call it 44.77 down to about the bottom of that, about 44.35. The expectation would be that it gets into there. You'll note that almost every one of the declines breaks below the slim ribbon, but it has not been giving you negative momentum indicators. So in this case, again, you would expect it to break below the slim ribbon and get into this support zone. It would have to get below 44.0580 to give you an indication of an intermediate peak. What's the probabilities of that all the way down over there? That's pretty low to get down there. Now, it could happen, and were that to happen, it would set up trouble. But again, we were looking for intermediate correction in here, and the likelihood of that is very small when you look at this right now, because again, we're following those very, very strong upward trends, those very strong configurations, or translations as we call them. And for those of you that are a student of cycle analysis, the translation is how far into the cycle does it actually peak. And when it peaks way on the right side, it's called a right-hand translation. And you can see right now we're already on the right side of this cycle over here. So it's remaining in a positive configuration, positive momentum, as you see, and the likelihood of any huge correction is small. Again, the likelihood of coming down below the slim ribbon under that 44.77 area out into this time frame that we were originally looking at. Now, the time frame did not change. Into that mid-September, into week 2 to week 3 is where we expect that correction to come. We still think it's going to come, and the question is, can it be severe enough to call a market peak here? The odds of that have been sharply reduced, and just as I talked about in that important piece I want you to see whether the correction already came and went. Well, we think it did. The important thing is to look at that and to say, yes, there's a lot of indications that now we have to wait for the shorter term patterns in the stock market to tell us that there is a peak, and it's going to take some pretty severe declines for that to happen. And right now, there's essentially no selling in the market coming in at all. As I said in the beginning of the show, rising prices are fueling rising prices. And we are at just historic levels of valuations. We have a massive amount of supply of stock coming on. I talked about that in the beginning of the show. And all of that is going to bring very, very big volatility in the market ahead. So despite the fact that now the analysis has changed some, it doesn't change the overall big picture of the risks that we still think will come in the market moving forward. Right now, it's very healthy, and you have to wait for the market to tell you that it's not. And that's what we're going to do. We're always going to bring you the highest probability, as I think we've done in this show. Please do become a subscriber. Look at that level 2 special that we put up. I think that it is just a fantastic for intraday traders to look at that and get our whole video library. And make sure you go to the askSlim site. Go become a free member if you want to just get a sense for what we do. If you're watching this on YouTube, do subscribe to that channel. Click the bell so you get notified. Make sure you give us a thumbs up. And watch the member videos in our playlists and past shows. I think you'll find them fascinating. Follow us on Twitter at askSlim, and any questions about our memberships, write to Matt at askSlim.com. That's it for this show. I hope you found it absolutely amazing and illuminating. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been creating